Hey guys, this one is my first stream in quite some time. Um, I think last Monday we actually had a very violent storm in the area. They've knocked about 6 kilometers worth of internet cable, obviously fiber optic for me. Um, so I'm currently kind of sat with only 4G as a kind of recovery box that these guys have given me when the repair work gets done. So I haven't actually streamed for a little bit of time. But in essence, I just want to cover a little bit, right? So this one's probably going to be on YouTube rather than TradingView because I can then record it and upload it rather than try to do it live. If it works all right, then I'll try a TradingView one as well, um, just to see obviously if the pace and the frame rate is all right. So I guess just in terms of where we are, right? And if you guys obviously are following me, you already know me. You're gonna have no surprise in terms of I'm saying nothing's changed for me in terms of where we've been, right? This has been months and months and months in terms of the situation. I've mapped this out for years in terms of where we are and kind of why I think we are where we are. It's still doing pretty much as expected, right? So I just want to cover this again, kind of just step by step, right? So kind of step back to go forward. If you're new and you haven't followed me, you don't know what I've talked about, you don't watch Paul's streams on TradingView, then I just want to kind of emphasize in terms of why I believe we are where we are, given where we've been, right? So what I'm going to do to start with, I'm just going to talk about first of all the first couple of phases, right? So again, I haven't done this for some time now. What we've actually got here, right, is this is in essence, it's an immutable ledger, right? This is on TradingView. This is kind of live and visible for everyone to see. This is every major swing and the logic behind every major swing, right? So if you come in and you can click on these links, you can hover over, you see them turn blue. Every one of these is kind of filled with information in terms of why you take it long from down here, why this was the reaccumulation phase, why I was talking about the rocket call being the top, why 28 was actually the first target, why there was another reaccumulation on the way up, where we would look at in terms of the extension 5, right? What I've then done is underneath this particular post, I've gone in and explained the individual posts, right? The kind of step by step guide. So like I said about the 28, for example, why we were calling this rocket call, why 28 being the target, all the logic is inside of each of these individual posts, right? Talked about things like, where we were going long and why from 28, where from 28, why I didn't like the 28 move up. You know, you can clearly see, right? This is from the top. What I was looking at is the move down, move back down, back up, right? And again, this is the level of detail that each of these posts have gone into, right? So on the 24th of August 21, we were at the top. I'm expecting a move down. I'm expecting a move up. And as I say here, the move up was going to be capped to 65K, enter into newfound liquidity, just taking the old all-time high over here, and we're going to come back down again very quickly, right? So all of these things combined, right? If you look at what we did, at this particular point, where was it to at this particular point there, right? The 24th of August, look, I was talking about, so the 16th is there, right? A couple of days further forward. And in essence, we had to move down, come up to the 65. These things are not random, right? These things are actually pre-programmed. You can spot from a million miles away, right? So, in terms of understanding where we've been, right, what I've actually gone and done, and again, just kind of emphasizing this, right, because this is how confident I am in terms of the current situation. Right? Not only have I gone and posted this in TradingView and had these calls, top, bottom, top, bottom, top, bottom, all the way through since being able to make these public. I've actually had a book published recently, and what I've actually gone and done in the book is the last chapter, right? Chapter 20, I think this is. Right? I've actually put an example situation. Right? Now, unlike many of the other books where they talk hindsight, what I've actually gone and done here, right, is I've gone and put in what I think is about to happen. I've used Bitcoin as a live example. This isn't hindsight. This is actually playing out now. I've talked about what we've done, and I've talked about what we're about to do, right? So you're going to have to zoom in and see this on a slightly smaller time frame. This is a monthly to a weekly view. But I've actually gone and put this into a book published in May for the current situation, right, where we are now. And every single chapter before chapter 20 is building up per the logic as to how I've come to this conclusion. All right. So again, just being confident in terms of where we are, what I'm seeing, kind of why I'm seeing what I'm seeing. Right. This is the kind of level that I've actually seen from the seller's climax to the AR, back down for the ST, which means we're currently in the rise for the first, I suppose, sign of strength, right? It's not labeled a sign of strength. It's just, for me, this is how I refer to it. It's the understanding that there's interest in the market, right? So putting all these pieces together, step by step by step, I've put this into the book, published the book, right? And actually had this now play itself out. So where do we go next? Why are we doing what we do next? Now, this part comes back to another post that I posted on TradingView, talking about the whole economy. Now, the whole economy, in essence, the driver and the driving factors for me is one, clearly the stock market. And again, the US being COT data as well as the stock market, things like SPX and the Dow Jones. These are good sample sizes, right? It's not the be all and end all, but it's a good indicator, right? So for me, in terms of understanding SPX, even down to DXY, right? These things can be used, whether you're trading in Bitcoin or gold or some other stock, these things can be used to your advantage, right? In terms of understanding what the market is trying to do, what the market wants to do, where the market's aiming to go to. So in this particular example, I'm going to share this particular post as well. On the 11th of the 11th, so 11th of November 2022, I talked about a key level, this key level being 100.70. Now, this key level is where I was anticipating the price to fall down to. At that particular point, you're looking for the bias and the character change. So let's look at DXY to start with, and this will then form the sentiment in terms of where we go with Bitcoin. So in November, let's go back to this. This was to December, November. This was the 11th of November here. I'm talking about why the price would fall down to the 11.70 range. Right. So we then actually get there in February. So from November through to February, or 3 months worth of a pretty accurate call, right? And this wasn't saying, hey, I'm buying or I'm selling, go long, go short. This is actually breaking down the logic as to why this level was key, right? How I could spot this level from all the way up here, right? We get the price come down. We get a nice rejection from that level and straight back down to exactly the same level. Right? It's the change of character sitting in here that's trying to tell me the story as to what I anticipate next. Okay, so again, this is where coming through the book, right, going through each chapter, I've broken down individual steps, right? This is kind of bite-sized pieces for you to figure this out for yourself. What I've actually gone and done then is use this bias for where we currently sit on the Bitcoin situation. Right. So, as I said, I got slow internet at the moment, guys, right? So I do apologize for any kind of lag or delay. However, in terms of where we are right now, I've painted things like accumulation back from October last year. I've painted as to why I believe we've had the SC, the AR, we've come up for the first indication of strength, right? Let's call this an indication rather than a sign of strength, right? So we don't confuse in terms of terminology. So we've had the first indication that there's some kind of strength in the market, right? That obviously is an interesting factor, interest in play overall. Okay. Now, this is still loading for some reason. It's obviously very, very slow in terms of this 4G. I do apologize, guys. I'll just wait for this couple of seconds. So, where we are at the moment, right? I think we are definitely accumulating. I'm not going to go into the Discord in terms of showing the COT data, right? In essence, what we've got with the COT data at the moment is we've actually got the sells increasing, right? And we've got the buys decreasing, which means this kind of pump up is in essence another form of profit taking from the bigger players, right? So the profit taking inside the Wyckoff schematic is in essence a way of reading how and why we're not quite ready to pump yet, right? Now, I've also shared my concerns in terms of us going directly up from here. If we were to assume that we've had this move up and this is impulsive, and some people come back to me and say, oh, what if this and what if that? I've shared my concerns, on that, right? And my major concerns on this is pretty clear. Right? We'd have to identify a 0-1. We'd have to then go up 1, 2, 3, 4, giving us a 5. If we have a 5, we've got some kind of expanded flat happening currently because we would have already tagged a 5 there. We could argue, that of the 3, 4, we could argue that this is going to make a much bigger one. Right? Now, the trouble being is even if we cap this at 33k, when we come back down for a 2, we're going to have to come into the red zone, right? The red-orange zone that I've got marked here. Right? So even with the best will in the world, we can go 1, we can go 2, right? And what we can then do is use the same fib extensions for now assuming that this is an impulsive move, right? And some of you guys want an impulsive move. This is how ugly the impulsive move is likely to look. We're going to come up for a 3 around 48k. That's supposed to be a 3 if the internet wasn't so laggy. Then we come back down for a 38k 4, right? And then we're very likely to finish off at a triple top 5, being 1, 2, 3. All right. So that's my major concern in terms of being bullish here, right? Without enough fuel in the tank, right? And I think fuel in the tank is probably a good analogy for this, right? If you understand, if you've read any of Richard Nye's books, for example, and he talks about the warehouse situation, the warehouse kind of preloading, pre kind of stockpiling for this, right? The COT data indicates that we're just not ready. The overall bias indicates we're just not ready. We've actually got multiple signs saying, hey, we're not ready. And if we are bullish, then I kind of see a pretty bleak, dim future for Bitcoin until 2025 onwards, right? Because the reality is, if we end up with some kind of triple top being 1 here, 1 there, and obviously a 63, 65, even a 69k here somewhere, then in essence, we're going to spend an even longer period sub 60k because we're going to be in a corrective move sideways for longer, right? So you're very unlikely to see Bitcoin at 100k if we were to go long at this situation. What I'd really like to see is another dart down, right? The collection and the sell-off in terms of the current retail liquidity. A sideways action here, the jump across the creek, and then ultimately away. Right? Now, if we get that, we could probably break through and find some new highs. If we don't get this pull back down, then we've already run out of steam. Right? So it's going to be a very long road to 100k, regardless of what influencer you follow. So, putting all the pieces together, I've talked about these key levels. I've talked about why we're doing what we're doing I've talked about how you can put and define the logic, bring the logic all together to make this kind of work, make this happen kind of for you. I've talked about a lot of other things, right? I've talked about this current distribution on a smaller time frame, so I'm not going to cover that here. This is something we've talked about in Discord. I've talked about this point and figure thing. This goes back all the way. I don't even know when we actually talked this, first of all. I think this goes back to, again, October, November time last year. Probably similar towards the bottoms with the extensions. I'll actually see if I can find an image of this because I think this was either the 31st of October or the 8th of November, if I remember correctly. So, these levels, guys, right? They're playing themselves out. We've only really tapped 50% of the point and figure targets, right? So it's a good indication that much like the inverse of DXY, where we hit the 100.70, moved away from it kind of quite aggressively, come back down to it. We've kind of had the same thing. We've had the rejection from the 50% marker quite violently. We've gone straight back to it. And therefore, some sideways action in and around this level isn't going to be a surprise. Right? Now, the next thing of interest for me, I know I've covered this in my last couple of streams, we've actually got a weekly stochastic false bar, right? So sideways action with a little grind up wouldn't be a surprise. It's not until you get out to the monthly time frame that you actually see what this is really aiming to do. Right? And when I say what it's really aiming to do, the reason for this is something that we teach within Discord. Right? There's a technique, and the technique that we're looking for, like I said, in terms of what we teach within Discord, it's actually set itself up right, almost perfectly for this move. Now, I'm actually viewing this on a monthly time frame. So we got a weekly false bar, hence sideways grind up, and we've got a monthly stochastic overbought. So going back to what I've just said about running out of steam, not enough fuel in the tank, the warehouse not being fully stocked, all of the above is just adding, I suppose, just more validation to the current situation. We got COT data telling you the same story, stochastics telling you the same story. Crypto Twitter is going mad for long calls, 100K. Everybody's jumping on the bandwagon, and therefore, I'm more and more confident in terms of what I've actually published in the book, chapter 20. I'm more and more confident this is playing itself out, right? With the phases that we've had, what I've actually noted over the last 3 years publicly, I'm comfortable. I'm confident. I'm comfortable. I'm seeing what I think we're seeing, and nothing's really changed my mind at the moment. So, I guess for me, going back to the original message, and I know a lot of people don't like me saying this, but nothing's changed. I've mapped this out. It's still playing along the route that I've talked about, and no change for me. All right. So anyway, thanks for watching, guys. And like I said, if this has worked all right, I will actually put another one on TradingView in the next day or two. So again, thanks for watching and see you on the next stream. Cheers all.